Stop scrolling. If the recent crimson tide in the crypto market has you checking your portfolio every 5 minutes, then you are precisely who needs to hear this. What you are witnessing is not merely a technical correction. It is a profound mass-selling panic, a collective psychological surrender where logic has been abandoned and fear and greed have taken the wheel. Bitcoin, BTC, has just smashed through a critical psychological threshold. Let's call it the X $1,000 level, a figure that, until hours ago, was the unbreachable fortress of investor confidence. The moment that number broke, it triggered a devastating chain reaction, a liquidation cascade that plunged the entire market into what can only be described as a psychological abyss. The narrative you are being fed, that this is solely due to Federal Reserve rate speculation or the exhaustion of Bitcoin ETF inflows, is incomplete. The real engine of this crash is primal human emotion, and understanding this is the difference between capitulation and compounding your wealth. We are going to decode the dark psychology behind this BTC crash, reveal the real whales currently manipulating this sentiment, and, most crucially, pinpoint the 3 explosive sectors: AI crypto, RWA tokenization, and decentralized physical infrastructure networks, DePIN, where smart money is currently rotating into, while the retail crowd panics and sells at a loss. This analysis is your psychological shield and your investment roadmap.
To comprehend the sheer speed of this downturn, one must first grasp the law of fear and greed. The market operates on cycles fueled entirely by these two emotions. When the fear and greed index spikes into extreme greed, as it did just weeks ago near the all-time highs, everyone buys, convinced that the price can only go up. This creates a highly leveraged, unstable market. Conversely, when the slightest tremor hits, perhaps a negative statement from the SEC or a disappointing inflation report, the fear mechanism takes over. The result is a mass-selling panic where investors, fearing the complete loss of capital, rush to the exit simultaneously, often selling their assets for less than they bought them, simply to stop the emotional pain of seeing their unrealized profits vanish. This is the phenomenon of trauma selling, where rationality is entirely suspended. The X $1,000 level was a self-fulfilling prophecy. Every trader had their stop-loss set there. When the first major whale or institutional fund started to offload a large volume, perhaps utilizing an AI-powered trading bot to optimize their exit, the price dipped just enough to trigger a swarm of retail stop-losses. These automated sales added fuel to the fire, driving the price down further, triggering even more panic and accelerating the descent into the psychological abyss. This is not random. It is a meticulously executed process of washing out emotional and over-leveraged traders. The irony is that the moment the fear and greed index registers extreme fear is historically the most opportune time for rational accumulation. Yet it is precisely the moment when the average investor is physiologically compelled to sell. This is the cruel, inescapable truth of crypto volatility.
The psychological crash is amplified by structural factors that were supposed to be the market saviors. The excitement around spot Bitcoin ETF approvals, which drove the initial parabolic move, has faded into a grind. Initial inflows have stabilized, and any short-term outflows are being magnified by the market's anxiety. This ETF reality check is one component. Another major stress factor is the persistent uncertainty surrounding the Fed's monetary policy. Keywords like Fed rate cuts delay are currently trending in financial news, directly correlating with dips in risk assets like Bitcoin. Traditional finance, TradFi, remains nervous about global liquidity, and cryptocurrencies are always the first to feel the squeeze. Furthermore, the burgeoning regulatory landscape, particularly regarding stablecoins and the need for regulatory clarity, continues to cast a shadow. Every rumor about the Gensler agenda becomes a reason for emotional traders to liquidate. Crucially, the whales and institutional players are far more sophisticated now. They use this volatility to their advantage. They are not exiting the space. They are simply rotating capital. When they see retail investors capitulating on their BTC holdings, they recognize an opportunity to acquire assets at a discount. The mass transfer of wealth is happening right now, driven by the asymmetry between the emotional decisions of the many and the calculated, data-driven strategies of the few, often powered by advanced AI agents that eliminate human emotion from the trading equation. This market movement is not about Bitcoin's utility. It is a masterful redistribution orchestrated by those who understand the law of fear and greed.
To secure your place in the next market cycle, you must look beyond the noise of the BTC crash and identify where the smart money is moving. This is the SEO goldmine and the foundation for viral content. 3 powerful narratives are currently dominating institutional interest, offering shelter from the psychological abyss and the highest potential for 100x gains. First, the AI crypto revolution is just beginning. Trending terms like decentralized AI, AI agents, and DePIN, decentralized physical infrastructure networks, are where the technological breakthroughs are happening. Projects focused on building decentralized GPU computing power, Render is a popular example, or creating autonomous AI agents to execute complex tasks on-chain, Fetch.ai is often cited, are becoming the backbone of Web3's future. The AI sector demands massive computational resources, and blockchain-based DePINs offer a cheaper, more resilient alternative to big tech. While panic sellers dump their assets, the foundational value of these AI-integrated cryptos is only increasing. This is a powerful, long-term trend that transcends simple market cycles, and viewers are desperate for actionable information on this intersection of 2 massive markets.
Second, we have real-world asset tokenization. This narrative is the bridge TradFi desperately needs to cross into DeFi. Institutional giants like BlackRock are actively exploring tokenizing everything from U.S. Treasury bonds to real estate. The allure of RWA is its stability and guaranteed yield, often backed by off-chain assets. In times of extreme crypto volatility, RWA tokens act as a lifeline, offering a low-risk yield in the decentralized space. This stability is the antithesis to the mass selling panic. The RWA sector's expansion signals true institutional adoption far beyond the speculative nature of Bitcoin trading. The volume of asset tokenization is projected to explode into the trillions, making RWA one of the most significant and undervalued narratives for long-term investors seeking both security and exposure to the DeFi renaissance.
Finally, the burgeoning Bitcoin Layer 2 or BTC-Fi ecosystem presents a unique opportunity. For years, Bitcoin was criticized for its lack of smart contract functionality. Projects creating Bitcoin Layer 2 solutions, like Stacks, or emerging Bitcoin staking protocols, are now unlocking the massive liquidity of BTC for the decentralized finance world. This movement, fueled by the excitement around ordinals and the BRC-20 standard, is transforming Bitcoin from merely digital gold into a digital platform. This internal innovation within the Bitcoin ecosystem proves that even during a psychological abyss, the technology relentlessly pushes forward. Identifying and investing in the leading BTC-Fi projects now is a strategic move to capitalize on the vast amount of capital sitting dormant within the Bitcoin's core network.
So, as we stare down the barrel of this mass selling panic, remember the law of fear and greed. This moment of extreme fear is not a sign of failure, it is the market's way of testing your conviction. The average investor is selling based on emotion and media hype, but the truly successful investor uses this fear as a contrarian signal. Your assignment now is to tune out the noise, stop checking the price charts every 5 minutes, and begin the deep research into the high-conviction narratives that will define the next bull run. AI crypto, RWA tokenization, and the BTC-Fi ecosystem. Do not let the irrationality of the crowd dictate your financial future. This entire cycle, from greed to the psychological abyss, is designed to strip wealth from the emotional and transfer it to the disciplined. This video serves as your moment of clarity. This knowledge is your crypto edge. Do not just watch the price fall, watch where the smart money is positioning itself for the rebound. The market is giving you a gift, a discount on future wealth, but only if you can conquer the panic in your own mind. If this in-depth psychological and narrative analysis has given you the courage to look past the Bitcoin crash, you must do 2 things. First, subscribe to this channel and turn on notifications so you never miss a critical market update during this volatile period. Second, and most importantly for this video's virality, I want you to comment below with one word: fear or greed. Tell me which emotion you are fighting right now. Your honest comment fuels the algorithm, pushes this truth to other investors lost in the psychological abyss, and helps us build a community of rational investors who conquer the law of fear and greed. Click the like button, share this video with anyone contemplating selling, and let's navigate this downturn with strategy, not panic. The future of crypto is not decided by today's red candle, but by the narratives we build in this moment of fear.